Good evening, Swati ma'am. With your kind permission, can we start? Ma'am, am I audible?
Yeah, you are audible.
Uh, Good evening to everyone present here. I am Neet Kaur, volunteer of Sambhav Initiative and moderator for this event. On behalf of Sambhav Initiative, I extend a warm welcome to our esteemed dignitary, Swati Panchal ma'am, and to all the participants in this 2 weeks online national capacity building program on art of contract drafting from fundamentals to enforcement, organized by Sambhav Initiative, which is working towards alternative dispute resolution, free legal aid, mental health, and creating legal literacy under the direction and guidance of Patron in Chief of Sambhav Initiative, Honorable Justice C.K. Thakkar sir, former Judge of Supreme Court of India, and Patron of Sambhav Initiative, Honorable Justice M.R. Shah sir, former Judge of Supreme Court of India, in collaboration with Pro Bono India, which is working towards legal aid and legal literacy, where today's session is all about leading and finance related contracts. Before we start the session, please adhere to some webinar etiquettes. I request all the attendees to keep their microphones muted during the session. If you have any questions, please use the chat box or raise your hand. It is my privilege to have with us and honor to introduce Swati Panchal ma'am, TEDx speaker and author, chartered accountant by profession, also a finance strategist, startup mentor, author and public speaker. Swati ma'am has done MCOM from Gujarat University, passed Diploma Information System Audit examination, a course conducted by ICAI. Ma'am was enrolled as member of ICAI in 2012. Ma'am has cleared CA in first attempt and became CA at the age of 20 years only. Ma'am is also a TEDx speaker and have experience of FAFP, that is Forensic Accounting and Fraud Prevention, FXTM, Forex and Treasury Management, Bank Concurrent Audit, GST, Insolvency and Bankruptcy Code 2016, etc. Ma'am has also written various articles on NBFC, MSME, women empowerment in leading newspapers like Divya Bhaskar, also given various TV interviews and speeches. Ma'am is also anchor at live TV show Arthik Samjan Apni Bhashma on DD Gurrar. She was secretary at Mumbai CA Club Toastmasters from 2021 to 2022. Ma'am is co-winner of Women and Young Members Excellence Committee of Ahmedabad branch of WIRC of ICAI, Chief Coordinator of Financial and Tax Literacy Drive Committee, member of CPE Committee of WIRC of ICAI for 2023 to 2024 and is co-winner of Financial and Tax Literacy Drive Committee of Ahmedabad branch of WIRC of ICAI, member of CPE Committee, member of Banking Financial Services Committee for 2024 to 2025 and was also awarded by Times Leaders of Tomorrow, Times 40 under 40. We are deeply honored to have you with us today, ma'am. Over to you, ma'am.
Thank you so much, Shawnit Kaur, for your for the wonderful introductions of mine. Thank you once again, and thank you Sambhav Initiative for the inviting me. And I'm really glad to be on this forum, and I welcome all of you in this webinar where we are going to have the insights on the various finance regarding documentations. Because nowadays, if we see that. The way scenarios are going, many more merger acquisitions are happening and loan agreements, and everything has become very crucial. So, before structuring any business or before entering into business transactions, the key documents such as loan agreements and everything is very much crucial. So, just I'm presenting my slides. Is it visible?
Yes, ma'am, it is visible.
Okay. Okay, I think so. Is it visible, right? And my voice is also audible, so we can
Yes,
start. We can
yes.
okay to go ahead. Fine. Uh, so basically, if I talk about various finance regarding contracts or agreements or MOU, term sheet. So presently we can see nowadays the if we read the business newspaper, business standards or economic times each and every day, lots of contracts are happening and the way startup economy is also rising into the India. So earlier was the era where the company formations and LLP formation was very quite slow. If you see the MCA, the Ministry of Corporate Affairs numbers as well for the company registrations or LLP or anything, so the numbers are high, like increasing day by day. So more and more people are doing the business into the structured manner. Earlier, we were noticing that most of the people were doing only the proprietorship or only the partnership structure was there. Nowadays, if we see the company formations are also like people are aware about the company formations and also what are the benefits that they can do. And also the fundraising has become the crucial element because nowadays everyone is aware that on the ideation level also you can get the funding and fundraising is seems to be very much feasible now. Earlier that awareness was also not there and other scenarios were there. Now that India is also going to go to global market, so there are so many permutations combinations are happening. If we see into the finance sector, then earlier only the PSUs were there that were leading. Nowadays if we see this overall market, then fintech is there. So the fintech is the platform that collaborate with between the customers and NBFCs, and they are the like the facilitator, we can say, and they do the business and earn with the case to case basis. So the fintechs are there, NBFCs are there, banks are there to fund them. Also the HNI family offices. And if you also see the scenarios, nowadays the AIF, the alternate investment funds are also increasing very much. So earlier the SEBI registered AIF we were seeing that it was quite less. But nowadays AIF are increasing, the family offices numbers are going high. Indian overall economy is completely going per person, the capital GDP income is also rising. So if we see the awareness on various aspects, so this is the country where the startup raise billions, the MNC enter into the joint ventures. So early morning, if you see the business newspaper, lots and lots of IPOs are also coming. So I think 2-3 pages of any business newspapers are also the like main board and SME IPOs are coming. Now people already awareness is there into the market, and we equity is always the cheap the cost where you can do the fundraising rather than debt, because in debt you have to give the committed percentage of interest. So the joint ventures and global tech markets, also the importance of now well drafted the contract has never been profound. So many young professionals, entrepreneurs are facing various loss, reputational damages. So if you also see the leading newspaper content where there is a reputational damages are there. And nowadays there is also the cybersecurity concern is there. We are finding the cases where the digital arrest was there. Last month only, we just heard the news about the CoinDCX where the server was hacked by the outsiders, and ultimately there is a huge amount of loss was happened. So in that scenarios as well, for example, if any cybersecurity threats are happening, so whatever the vendors that we have hired about the which are the clauses that we have entered. So in such scenario, also the financial damage is very huge if we consider such aspects. So in that way, whatever the agreement has been signed, whatever the term sheets that we have finalized with them, it becomes very much crucial for the organization. So rather than doing any kind of the informal arrangements, better we also think that everything should be the formalized and it should be in the proper and structured way, including the agreements and everything. So this is a very essential business requirement. So in this 1 hour, we would like to touch upon on the loan agreements, loan settlements agreement, the deed of mortgage, share pledge agreement, the term sheet. Now, what is the term sheet? Basically, about the key aspects and elements of term sheet, MOU, why to draft the MOU or shareholder agreement, and NDA, corporate guarantees, and everything. So I would like to touch upon on the brief uh, idea about what are the key aspects that we need to be very much conscious or for drafting such things. So basically, if we see the overall idea that why contract drafting matters, because as I make you understood, because all the companies are going to global market, and earlier was the scenario where the people were doing business into the very close market. So the close market scenario was there, but nowadays it's not like that. You are doing business through LinkedIn. Many of times you don't know about the genuineness of the entity, genuineness of people transactions and everything. So sometimes it's become very cozy and suspective environment. And truly believe, even though the situations we safeguard into the many manner, but nowadays also various businesses men and various businesses are, they just say that we do the businesses on the grit, like our inner confidence. If we are particularly confident about the founders, then only we go ahead, even though how much documentations we do. But ultimately, it's all about the vibes that we are matching into the business. So each and every person has the different perspective, and many of the businesses just want to safeguard with the documentations. Again, if we see the litigations and arbitration is again the long matter where each and every businesses doesn't want to like to fall in. But how we can safeguard this and how we can prevent this, because ultimately it's all about having the minimal damages in case of if case of something happens or any outsiders the suers. So ultimately, if we see the number of the 40% of legal disputes, whatever happen of the corporate legal disputes in India, originated due to the ambiguity into the contractual language or missing clauses or poorly defined obligations. In also one of the agencies like the PwC has rated that top 5 business risk. Doing the business itself is a risk because that you are taking, and minimal business risk each and every organization's take. you know and the contract mismanagement ranks among the top 5 legal risk factor for the Indian companies according to the PwC. So there are various business risk into the any organizations. It can be the environmental risk, finance risk, default risk, credit risk, and the contract management risk. It's also one of the top 5 legal risk. So you can understand the crux and situations seriousness. How the contract management is also like nowadays been considered in a very serious manner, and how much focused we should be there. So whether it can be the shareholder agreement or employment contract or technology licensing deal or lease documents, whatever. But multi-million dollar disputes can happen. Even many of times we see there is a litigations are going on between the employees and the employer, and many of time the employee also file complaint for the employer at various forum, maybe the PF and any other. So if you are also doing the contract with the employer-employee contract, then you also need to see whether uh, total PF, and many of times there are contractual employees where there is no understanding about the PF part of the employee, whether the PF would be the responsibility of the contractor who are providing those manpower, or ultimately the employer where to whom the services has been given. So such type of tax aspects, whether the provident fund or ESIC or any other matter. So you should be, while drafting such agreements as well, while taking the employees on hire, you need to be very much clear who is the responsible and who would be for all the tax regarding aspects. So this is all about the recent high-profile contract failures. If we see on the Z-Sony deal was about to happen, but due to some the non-compete obligations became the point of contentions. Again, the IPL franchisee disputes were there, where there is ambiguity into the exclusive right and non-compete and the morality clauses. Again, if we see the Baiju cases, there was the ambiguity in shareholder rights clauses, fund usage conditions, and exit clauses triggered arbitrations and reputational damage for the edtech giant. How that edtech giant has grown over the period of time, because everyone we were seeing the hoardings of the Baijus, and the valuations of the Baijus were, it's skyrocketing. It went very high, and after that it's the way it has completely fall down, and the IBC things were happened, and everything, it's completely the downtrend of the Baijus, where all the celebrities also resigned doing the marketing things for the Baiju, and also the key shareholders or key investors has completely lost their interest, because whatever the funds were managed by the founders, it was into the misappropriations of the fund. Because ultimately what happened many of times into such startup as well, if you have not signed the shareholder agreements where you have the exclusive rights to use the funds into the company only, in no manner you can do the related party transactions, because many of times what happened, the investors are doing the funding into the company, and such entities do the round tripping of funds. They show they have taken services from some related parties and do the round tripping of funds, and from that related party transactions, again the fund will come to the founder accounts or relatives of founders. Such things happen, and again such type of things open up into the investigations with the corporate like MCA or other SEBI things, if the company has been listed. So again, such type of clauses are very much important in drafting of exclusive agreements if you are investing into such things. So if we talk on the term sheet plan, so because what is the term sheet? Term sheet is a very prima facie documents. The term sheet has been given to each and everywhere. Maybe, for example, if you are doing the fundraising for your clients, that time also we ask for the basic term sheet. That is we can say that this is the non-binding term sheet. So the no one can sue on that term sheet. But the whatever the conditions and the how the whole deal will structure, that should be the final on the basis of term sheet. There should be some variations will be there, but it should not be like in the term sheet. There should be something. The percentage of return has been mentioned like the 510, and the given percentage would be the like 25% you are charging. So into the fundraising, maybe into the date part or equity part, the term sheet is very much important. Or what are the key aspects that we need to understand into the term sheet? Likewise, the basic elements. What is the basic purpose for this? About of the nature of all the transactions that the this party is willing to do the fundraising, and what are the underlying things and object, whether the term sheet is binding for how many periods, like it's the 12 months or 6 months, and after that what will happen in case of there is some challenging into the. So the term sheet we also signed while doing the fundraising in the mode of equity. That time we signed that, for example, if the company will invest, or HNI or investor will invest more than 15% into the total equity of company, then investor also has the right to appoint the executive director or non-executive director into the company. About they will sit also into the board level, they will also enjoy these rights, also enjoy their rights. Also the MIS, about MIS part that they are going to take and everything. So this is the term sheet is a very the prima facie documents, or we can say this is the first level documents that we draft the term sheet. So whatever the basic nature of the transactions we define into the term sheets. So the recently also there is example of Zilingo where the funding collapse, lack of clarity around the founder roles and investor veto rights. So this is also such type of things happen. About also in the term sheets, we need to understand about the clauses related to the exit rights, because if I say specifically into the equity market, if we are signing the term sheet, then ultimately investor is willing to invest the funds with the terms that they will be given the exit in 3 to 4 years. The exit can be the secondary sale, or it can be the main board or SME IPO. So ultimately, the exit right is very much important. It can be into the loan agreements or any other things. So exit clause is very much important. Yeah, exit right is all about, for example, being an investor. For example, into your company, I am investing the fund. Let us say 1 CR fund. I am investing for a period of, I am committing that I will be there in your company into for the 3 to 4 years. But let us say, for example, after 4 years, it is your responsibility, it is your company's responsibility, main promoter responsibility to give me the exit, because I am the investor and I definitely look out for the my fund increment. uh, I'm here not to run the company, but being a PE investor, always see the return, because whatever the investments that I have done, I want my return. But ultimately, after 4 years, that if you are not going to give me the exit in your secondary sale, then I have the rights. And what can be that rights? That rights can be that I will enforce the company for to go for the IPO, or I will sell my shares into the secondary market because many of times before selling your shares into the secondary market to some other, the first opportunity to be given to the existing shareholder, to the promoters or anyone. But if you are also not willing to buy their shares, then I can do that. So such type of exit rights you can mention into that term sheet. About the liquidation preferences as well, about yeah, the term sheets definitely can be renewed, and you can renew the term sheet with the changes also, and addendum also can be given. Also, the anti-dilutions protections carry real impact into the term sheets. So are the key points uh, into the term sheets. Again, into the term sheets, all the commercials. For example, if you are also into the dealing with the bank, then bank will give you the prima facie pre-sanctions where everything would be written, that what would be our the rate of interest, our processing fees, how much would be that we are charging, whether we are charging separately for the CBIL or whether we are charging separately for the CKYC on for non-submission of the stock statements. Panel interest would be how much, the panel interest for non-payment of EMI, no panel interest for non-submission of the stock statements, each and every commercials. For example, if you are going for the BG, bank guarantee, then what would be the panel interest, each and everything should be there. So all the commercials specifically needs to outline into the term sheets, because later on, once the term sheet has been finalized, and if you are going ahead, then you cannot again come back, bounce back, seeing that I was not aware about this. So again, in case of the company acquisition, also the same things happen. For example, if you are buying some company or you are going to measure acquisitions, then what is the prima facie things about for the due diligence, how much time that you are going to take. And after due diligence, you have to complete within the 2 to 3 months. And after that, you will go, for example, if prior approval required with any agencies, then you can go for that. And after that, within these durations, you need to complete other tasks and everything. So everything should be properly defined into the term sheets. So loan agreements and mortgage deed, if we talk on that, then loan agreements should be clearly defined, because this is the RBI Fair Practice Code. You have to clear cut give all the instructions and all the guidelines in the user, where the customer can get the idea. Because if many of times, as per the Fair Practice Code, banks and NBFCs are not providing into the vernacular language. So this is also one of the mandatory conditions, where the person doesn't understand in the English, then you have to provide it to the vernacular language as well. So the loan agreements, once you review, you have to check whether interest rates, and whether interest rates are fixed interest rate, or it's the link with the MBLR, or external benchmarking rate. So what kind of the interest rates they have levied. So if there is, in case of fixed interest rate, you need to check if there is any extra processing fees is there or not. What about the default conditions? Because what happened in the banking scenario, for example, if it is more than 90 days outstanding, then the account becomes NPA. It has been called the non-performing assets. So once your account has become NPA, then your CIBIL score will affect, because each and every banks and financial institutions need to submit your data to the CIBIL. CIBIL is the CIC. CIC is the credit information companies, and there are four credit information companies into the India. It's the CIBIL, Mark, Experian, and Equifax. So all four entities report the data, and while you are going for the other loan as well, so they can able to fetch. There is a default on this part, and they also take our consent while sanction letters and loan agreements, that we will upload your data. And every 15 days, earlier it was like just 1 month, every 1 month you have to upload the data. Bank upload the data, but nowadays it's the 15 days requirement is there. For example, so it's a very short intervals. For example, after if you have the outstanding loan with the three entities, if you are defaulting at the one entity, then immediately your CIBIL score will get impacted. And within 15 days, the other entity, if you are going to take for another loan, then they will able to check it out that there is a default. So there is a completely red alert. Okay, so yeah, definitely the person can exit before the exit period if he finds the company not profitable. Such clauses also you need to specifically mention. The investor has the right to exit before the expiry of this tenure into the below mentioned situations, and that conditions that you can define, or you also can make it open, subject to your the mutual agreement. So into the loan agreements, again, the loan agreements and the sanction letter needs to be aligned, because many of times what happen in the loan agreement, the conditions are completely mentioned different, and into the sanction letter completely the situations are different. Because whatever happen, the sanction letter the bank will fetch. So ultimately you have to check all the repayment structures and everything is aligned into this sanction letter as well. And also again you need to check the percentage of margin, like securities and collateral, because many of times they are also asking for the cash collateral, or it's a movable property you have given, or any immovable property. Again, there is a hypothecation against the stock and book debts. For example, if it is a stock, then it's within outstanding for a more than period of 6 months, they will not consider. So again, the margin is very much important, and also you have to make sure the loan agreement, sanction letter, everywhere the margin percentage has been clearly outlined. And also about the securities valuations, because valuation is again very subjective matter. Many of banks will consider the market value, again they will check the distress value. So you have to check which value the bank will consider about your property. For example, your property valuation is the 50 cr, and you have been given loan of 100 cr, then it's the 50% margin that you are giving to the bank. And also on the renewal as well, if there is any scope for the decreasing the margin, that you can check. Also the rights of lender and borrower, because in this scenario you need to check foreclosure charges, because many of times we take the loan from each and every person, but we do not check whether the foreclosure charges are there or not. So we need to specifically check the foreclosure charges are there. And also if there is a foreclosure charges are there, then there is a percentage. So there is also scope for the negotiations that you have. So you can do the negotiations for that foreclosure charges. So you need to be very much clear about the foreclosure charges. So again, for the loan agreement, so if you have any concerns with the loan agreements, and then you can write with the grievance redressal officer, because each and every bank has the grievance redressal officer. So first you can reach out to that authority, and after that your matter has not been resolved, then what you can do, there is also the particularly scheme at the RBI level. So you can reach to the RBI, you can write email to them that this is my concern, that has not been resolved with this respective bank. So you can do that. Also, there are various rights for the lender and borrower. Let us say, for example, uh, if you're if you have completely finished your loan, then you have the right to take your all the documents back within a period of 1 month, and the banks and NBFCs are also abide by that. So if you are not getting that, also you can punish the bank, or you can charge. Uh, there is also the guidelines of the banking regulations, and RBI master directions are also there, where 5,000 rupees per day you can the bank need to pay. For example, if you do the complaint that I have completely repaid the loan, but I have not been given my all original documents and everything. So you have to be aware about all your rights, and for the lender and borrower. So if you are also for the lender side, then you need to take all the permissions from the borrower, because many of times if you are hitting the CBIL and there is not been mentioned in loan agreement, for example, whatever the MIS and annual reports, if it is a corporate, then you need to take. That also needs to be clearly defined into the sanction letter, because ultimately the sanction letter is very much essential. In many of times we have seen like the ILFS case that highlighted for the clarity in the default and security enhancement clauses. So without there is a clear clauses, enforcement becomes very much delayed and messy. And nowadays what happened nowadays, for example, if you are making default, your account is NPA, so bank or NBFCs also sell all that portfolio to the ARC, that is the asset reconstructions company. So it is also nowadays evolving. Earlier was not, these situations were there. So your portfolio completely taken over with the other entity. Even if you have taken loan from the SBI, now you have defaulted. So the SBI has already sold out your portfolio to the asset reconstructions company, and everything is online. So you have to be there, uh, and you should be aware that maybe and such, because for example, if you are from the lender side, then you need to mention all these conditions, that in case of default your portfolio can be sold out to the ARC or any other financial institutions, and they have all the rights to do the recovery and everything. And there is a RBI also. So RBI is very much taking care about various customers, that there should not be the harassment and everything. Excess interest should not be there. Also for the follow up, they cannot call after the office hours, because raat ko 11-10 o'clock they cannot call, and that you have the outstanding dues of this much. So these are also the guidelines by the RBI. So you need to be make sure and adhere with the all RBI compliances and everything. Also, the mortgage deed, there should be the clearly define, identify the collateral, valuations basis, the default recovery timelines to prevent the dispute during the enforcement. Because in one of our recent cases that we have seen, one of it was the very huge portfolio of 250 CR. When one of the leading bank has completely prima facie sanctions everything, and they were agreed to, the lend that much fund. But what happened into the valuation report, the valuer has said that the entry point of that particular lens that we are not getting. So just due to the one point, all the funding has completely been stopped. So many of times such situations also happen. So you also have to be very much particular about whenever you are having any property regarding transactions, whether the entry level route is properly visible, because such type of problem can happen while while giving your property to the mortgage to the banks or finance institutions. And that type of, again, if you have even though the 300 CR property, but against which you cannot even take any single rupees penny. So such type of situations arise into the practical scenario. uh, it's the RBI has the different master directions. Let us say, for example, for the banking as well, about the customer grievance redressal policy. And the bank is RBI is again the central bank of India, and the RBI give the master directions from time to time, and each and every bank's financial institutions need to adhere that. And now the bank and financial institutions need to form their own policy for the customer grievance addressal policy. And for example, if you go with the any bank website, you can identify this policy, and you can get idea about the who is the customer grievance redressal officer. So you can get idea from the bank website as well. And RBI level also, they are making nowadays very much aware to the various customer, like RBI कहता है, and many things. So you can refer that, and you can be aware about your basic customer basic rights, and also if you are from the lender side, what are the things that you need to take. And because nowadays the education awareness is there. So earlier were situations that people were not reading, or they were not doing anything, the things. So such scenarios are there nowadays. So you have to be very much particular. So yeah, into the ILFS case as well, for example, they have defaulted, but the many of the bank financial institutions not able to recover that security, security underlying security, because there were many enforcement, and the messy clauses were there. And many of times what happened, for example, if there is a one corporate entity, and they have uh, they have taken loan of let us say 400 cr. So in that 400 cr, they can be the multiple banking arrangement, where into the multiple banking arrangement each bank has been given the separate property. Or many of times it also happens that the whatever the property has been given to each and every bank, there is one lead bank. So they have to submit all the stock statements, all the valuation report to the main lead bank only, and other are the member bank. So the lead bank would drive the whole show, and the member bank be the part of it. So all the property regarding documents, everything would be at the lead bank, and the other member bank would be given that the consortium agreement. So in such scenario also, you have to be very much conscious that which kind of the multiple banking arrangements will be the beneficial to the company, or any the consortium would be the right thing, or everything. Yes, the RBI also their own optimization schemes, where there have been specific criteria has been defined by the RBI, that in that particularly scheme, that you have to upload that on the website. You need to put up who is the grievance redressal officer, where the complaint needs to be lodged, and everything. And also after that, the bank at their own level make their own policy, and there is also the mechanism whether you have to complain on which number or which email ID. So everything should be there into that line item. So it's all again defend the corporate structure. Generally, whatsoever the bank has given the higher funding would be heavy, the lead bank, and such type of scenario is there. So you have to be very much conscious while finalizing into your banking portfolio as well. Who would be the lead bank, or who would be the member bank? Again, for example, the loan settle agreements, if we check, then that time as well, the agreements are very much crucial. So you have to in IBC proceedings, if we say mainly, then rather than just defining the mutual understanding, or you have to be very much clear about the contingencies, the payment plans, the timeline for repayment, about the future liabilities, what would be the scenarios, the where in within how many delay days, who would be enforced, and what would be the banker's rights, at which authority they will put up the case. And within this portfolio, if the company has not made any repayment, then the company has the right to sell their portfolio and everything. They will write into the CBIL, and everything should be very much clear. You need to take the consent, because nowadays what the scenario, everything is in online. So again, even if your CBIL can be checked by one person, for example, if you have inquired for the loan. So the number of inquiries that you are making for the loan amount as well, that much time your CIBIL will go down. So for the corporate as individual as well, for example, without your consent, if you have someone hit your CIBIL inquiry, then you have to be very much conscious. And you also need to check your because many of times many of have the confusion that it's the CIBIL is only or at the individual level. No, it's not like that. At the organization's company level, there is also the CIBIL. So you need to constantly check half yearly, yearly, what is the impact on your CIBIL, whether there is any unauthorized entry not been there into the CIBIL. Because nowadays, if we see the newspaper, there is a daily some the fraud cases are happening where you have not taken the loan, but maybe your PAN account, your bank details has been used. So many of times after checking the CIBIL, you come to know that such type of entries. I have not taken any bank credit cards, but such type of defaults are there into this, and you are completely the baseless, and that time. Uh, your CIBIL might have get impacted, and once your CIBIL has completely go down, maybe the say 750 is above is a good, but if it has gone down to 600, 550, and to come up to that CIBIL, it's a very crucial and challenging part. And nowadays I've also heard about the before doing marriage, the people are now getting checked the CIBIL of each other, because nowadays this is the situations to know the financial health of each other, because all the glittery things nowadays is not the gold, and you have to be very much conscious. जो दिख रहा है वो होता नहीं है. So you have to be conscious while selecting your vendor, your customers, whether they can they are healthy and sounds or not. Because many of times, as I said, the loan contract agreement is the fifth risk. So the credit risk is also the huge risk. It's the default. If you've done all the transactions and if the party has defaulted, now what you will do, वो तो हाथ खड़े करके चला जाएगा. So being the proactive stage. The loan statement agreement, if you are taking the loan, each and every the bank has their own set of the loan statement agreements. That I can provide you the offline. About the CBL being a financial institutions, you can. Otherwise, you cannot check other someone else CIBIL. For example, if I want to check my friend's CIBIL, I cannot. Unless and otherwise, my friend has inquired for the loan or credit card or something. So being a financial institutions, I can check it because I have ID password to check and retrieve the CIBIL records of any individuals or any corporate entity. But if you are not the financial institutions, that you can check your own CIBIL on there are many websites are there, check my CIBIL, or you can do it, but you have to check it uh, maybe yearly or 2 year, or you can do it, because ultimately CIBIL is very much important. So if we talk on uh, the shares pledged now, this agreements. So we need to be very much careful about the essential components like rights on enforcement, share value at the time of pledge, trigger events for the enforcement, and the top-up requirements when the equity value drops down. So you have to be very much careful, because ultimately, what happens nowadays, you can see like various fintechs are there. So it's not like पहले ऐसा था कि just गोल्ड के सामने लोन मिल रही है, प्रॉपर्टी के सामने लोन मिल रही है आपको. आपको nowadays you are also getting the loan against your LIC policies. You are also getting loan against your equity portfolio, and these are also instant things are happening. There are many the fintechs are into the market. They get access your demat account. They can evaluate. They can just note down your present the demat statements, and against they have specified criteria about the loan to value, and they can give give loan to you. So if you are also if you are pledging, then there is a loan to value about is very much important. For example, the present market value is 100 rupees, So as per their lenders policy, they just give to the 70% or 60%. And when there is a scenarios in case of default, when they can transfer the shares to you, and at which value, because it would be the same market value or it would be the discounted value, or how it will things happen. Because if it is listed, then you can get the pricings from the online, but if it's not listed, then what would be the other method that they will rely on? So all the things would be there into the sanction letter and term sheets and everything. Now also, if we check on the shareholder agreement, is I make you understood that the nowadays, if you are also taking 1% equity or 10% equity, or taking the major stake into the company, then this is very much important. Then many of times the company are giving, if you are taking more than 5% equity or 10% equity, then they will give you the board compositions, whether you would be having the right to appoint any board level director, about the voting rights. Because generally into the equity, we would be say all the equity shareholder would be carrying the paripasu. Paripasu is the one share, uh, one voting rights you have. Nowadays, if we see in the corporate structure, many of the companies are also giving the CCMPS. CCPS is all about the compulsorily convertible preference shares. So the preference shares, that over the period of time you have to compulsorily convert into the equity. Such type of scenarios are also there. So in that scenario, you have to be very much particular that after over the period of time, at which valuations that compulsorily convertible equity preference shares would be converted to the equity. For example, if the percentage has been defined or any valuation has been defined, then again it's kind of, for example, five, if you have the five CCPS, compulsorily convertible preference shares, against which you will be given one equity shares, and also the other conditions that you can mention. So about the shareholder agreement, if I outline, then all the basic terms and conditions about the tag alone, drag along rights, if your the something things had not happen, then what would be the scenario, whether you can drag the company into the IBC or such type of conditions also you need to be specifically mentioned into the or the shareholder agreements. And also, for example, if any fraud cases that has been happened, so before the new investors are entering into the company, and before that all the liabilities and responsibility of the all the promoter, and so for that also you have to be very much clear. Yeah, basically, if we check the Sakuntala about the guarantor liability, so the guarantor liability is a huge. Many of times we think that there is no liability on the guarantor. The completely whole onus would be on the the ultimately who is beneficiary and who is going to take the fund. But it's not like that. Being a guarantor, it's a huge responsibility and liability, because ultimately you are the guarantor. So if the counterparty is defaulting, then you have taken the guarantee, where you are saying that I give guarantee. But again, in that guarantee also, you can mention whether the guarantee is particularly to this much amount only, or it's the infinite guarantee that including the panel interest and everything. So here you have to be very much conscious before giving guarantee to anyone. Typical, I think, yeah, about the to be the part of the financial creditor board, to be the part of the financial creditor board, what should be the percentage of the shares person should get? So the non-financial creditor on financial creditor, if we see about, then the credit ultimately it's all about the company to company structure. Whether, for example, if you are into the non-financial creditor, then what is the company's policy? And ultimately, when they are going for the fundraising, that time they just articulate, because many of times what happen, if you are taking the majority of stake, then if you will not be having any the nominee director, then you will not become to know what the company is doing, because each and every company has the corporate governance mechanism, where many of times if we see into the listed company, the audit committee chairman should be the independent director and everything. Where the because many of times what happen, if there is a no such person representative of investor, then the funds from the investor completely vanished off, and they will not be able to. That is the same things has happened into the Byju's case. They will not able to track the where the fund is gone, where the what the founder has done the round tripping, and maybe how many the related party transactions has been happened. So you have to structure and where your client is investor or you are the investor, you have to be conscious for that. What are the rights and decisions making power that you want to take? And again, for example, the clause on the right of first refusal. Uh, if we say about the then many of times if there is a the company, for example, your stake is only the 25%, but what happen in that 25%, the company is allotting shares to someone else or to the huge money. Then what happen, your stake will automatically go down. So ultimately, whatever the first right, if the company is allotting more shares, should come with you. Otherwise, in that scenario, what will happen? You will not come to know about from whom the company is taking the funds, and you will not have clue. Your automatically shares will dilute. For example, there is a 10,000 number of shares and you are having the 5,000. So you are having the 50% stake and other promoter is having the 50% stake. Now the company is thinking to allot 1 lakh rupees shares, right? And now they are allotting, for example, 90,000 equity to outsiders. So now what happened? There is a 1 lakh 10,000 shares, and out of that 1 lakh 10,000, you are only enjoying the 10,000 shares. You have completely sit down to the minority from 50%. So whenever the company is allotting the new shares, the you should have that first right, whether I want to accept that shares or not. Also the funding rounds, the deadlock situations, many of times what happen, the funding become completely the stuck where where you don't have any clue, because you have funded because someone else have committed that I will also do the funding. But if such things scenario happen, then you also have, after signing the term sheet, after doing the due diligence, you should have the right. If such situation happen, then I will not, after signing SHA as well, I will not infuse the fund in that scenario as well. So you have to be very much clear and you have to draft all your SHA accordingly. The shareholder agreements and the article of associations both are the completely different. Article of associations and memorandum of associations are the key basic documents of company. This is kind of the crux documents because each and everything you will do with the MOA and AOA of company. But the shareholder agreements are completely different things where you will structure and it would be drafted transaction to transactions wise. Now, if we talk on the NDA part, then NDA is also like, the each and every stage we sign first document is the NDA, that is the non-disclosure agreement. But I would like to say that how many of us adhere to this NDA, and I think least enforced contracts we can say into the business, because before sharing data to anyone, what we do, we sign the NDA that you will not share our financials with our competitors or any outsiders, because all the financial regarding data or any other things are very much crucial. Maybe if you are into the technology company, finance, IT, then what the structure that you have established and everything is very much important, and it's very secretive in nature. Uh, so the NDA, we should really specifically specify about the liability of breach. So if we come to know that you have the breach this agreement, then what would be your liability? We will enforce this NDA and you would be liable to the loss of damages that is happened to us. Now the loss of damages that can be into the lakhs, into the crores, considering because in the movies as well, before doing anything, shooting and everything, the whatever the actress or actor, they need to sign the NDA that they will not disclose all story, and or whoever the agencies are also, they need to completely be the secretive and abide by these all NDA. Into the IT sector as well, into the finance as well, because ultimately these all are the competitive, the customer suppliers that our organizations have. So other competitors should not know that which rate that we are dealing. So because it's all dealing with the confidential informations, while sharing everything, the first thing we need to draft NDA, and we need to customize at our organizations at different level. And uh, I think this is the only right practice to have the signed NDA before sharing any data. So if we talk on the corporate guarantees and MOU, then generally corporate guarantees be given into the group companies, because generally, for example, there is a holding subsidiary concept is there, and the holding company has the property, but the subsidiary company doesn't have any property. Then what happen? If there is a subsidiary or there is a separate group company is completely the new and they are not having any financial tractions, then the bankers didn't get any comfort to give them loan. So they take the corporate guarantee, because where whoever the main company is, they are giving the guarantee that our company, our group company will, if it defaults, then we will abide by to we do with our things. Yeah, so MOU you can enforceable, and MOU are definitely it's a binding documents, but also many of times we make the non-binding MOU, because ultimately MOU are the basic documents. I mean, in case of, like, for example, acquisition of company, this is the prima facie things in basic conditions that we both are agreed. But in many of scenarios, the situations may change, because if there is already the considerations and action has been taken on that MOU, then you cannot treat there is a non-binding. There is always enforceable. It is. So the corporate guarantee where the intercompany loans and group financing are there, then promoter give the guarantee on behalf of subsidiary or other companies. So uh, the corporate guarantee where you should very much specify. For example, in the holding company have given corporate guarantee to the subsidiary company. So such disclosures are also there, because the same things has happened into the like that Mrs. Kocher cases, where there is a disclosure part it was there. In the annual report, disclosures were not made. These both are the related parties, and the corporate guarantee, the disclosure was not there. So what happened in that scenario as well? There is a misrepresentations and mispresentation of fact as well. So, for example, if I am the holding company, if I have given the corporate guarantee to my subsidiary company, and if my subsidiary company defaults, and if I have not given these two related party transactions, if I have not shown to my stakeholders, then if later on, if any major default come, then what the investor will say, that you have not shown us into the annual reports or anywhere that you have given this much amount of corporate guarantee. Because whatever the corporate guarantee, for example, if you are giving, then this is the just guarantee. This will not come into the financial statements. For example, if you have taken loan, then it will come into the financial statements, that is the loans and borrowing part. But the amount you will not acknowledge as loan liability from the day one you give the corporate guarantee. So you always need to disclose, the proper disclosure should be there. And also, before giving the corporate guarantee, being a one director, you cannot do. You need to pass the relevant required the board resolutions. ROC filing should be there. Also, the corporate guarantee, in which situations you can invoke that corporate guarantee, each and everything should be there. And again, for example, if the subsidiary company or group company has taken the corporate guarantee of holding company, then that company also need to disclose in their financial statements, in annual reports, that this is a guarantee, corporate guarantee given by our holding company. And again, the corporate guarantee, you need to file relevant ROC forms as well. Also, the MOU, as we understood, the MOUs should specifically the base document of any transaction or any deal is the term sheet, and the MOU. MOU would be term sheet will be very short, but the MOU, we can say this is the very the detailed document in which situations these transactions has happened, what are the basic mutual conditions between us, or what are the things that the things are there. So the MOU uh, is a very detailed one. So we narrate each and every transactions for the MOU, where in which conditions and how they are aligned, and about in case of failure or non-providing of documents, this MOU will be who would be the responsible for which part, about also the jurisdictions, about the and everything. This is all about the exit clause and everything. So also if we check about the sectoral relevance, then into the startups, we can see the drafting term sheet is very much essential. Safe notes, being if you are into the startup, then you should be very much clear that what are the basic terms and conditions on which the investors are coming on board, or what are the relevant things about the percentage of return also, if you are committing to the investor that over the period of time I will give you the 15-20% returns, and if it is not achieved, then how the things will happen. So such type of scenarios is there. Also, the you have to be very much specific in drafting all the startup regarding documents, maybe the term sheets and everything. About the VCs, you have to be very much careful before investing into the startup, because this is also the very high risk investment, we can say. Again, the startup is a new asset class. It's evolving over the period of time. And it's also evolving a huge, the scope and the opportunities as well, because you can also take the virtual consultancies there. And because nowadays once the startup is going into the growth stage, then series A, B, C fundraising, they constantly need advocates for reviewing their all documentations, weightage, and doing weighting and everything. So this is also very good opportunities that you can see. Again, the safe notes, it's all then about like about the exit clause is all again the, and what is the favorable situations and conditions that you can. So the agreements where there is always the exit, and exit should be the proper, and it's always the achievable. Being a startup, you cannot commit that we will give you the exit into the 2 years in the IPO, because it also take to IPO structuring also takes the time. So you have to consider, and the practical way out needs to be given to the term sheets and MOU, everything. Again, if we see in the real estate, so RERA is mandatory. So into the RERA, you need to be very much clear that it's all the agreements that has been structured with the builder and buyer, that has been as per the RERA, because it will otherwise you will not be able to claim your compensations and any penalties and everything. So also the media, because the celebrity endorsement and OTT licensing will right clause about the litigations and everything. So you have to be very much clear into the which sector you are addressing, and about the which sector standards it is. Also the manufacturing, the incon terms, that means the international terms and conditions, what are there about their warranty clauses, dispute mechanisms, international standards, and you do arbitrations, then there should be always the arbitrations clause, rather than doing completely into the litigations matter. First you go with the arbitrations things, that that is the things that you need to follow. Again, for example, what are the drafting pitfalls in future? So many of times we see that the use of undefined legal terms. Even if we draft our reports, then we draft many of times. In some of the situations, if the investor has not complied the things, then we will go with the exit clause. But what is the some situations? You need to clearly define that in case of non-providing of the rate of return in between 15 to minimum 20% return, the investor has the right to exit after 3 months from non achieving this. So wherever you are specifying some of the conditions, so you have to be very much clear, give the numbers, give the statistics figures, that in this scenario on non-achievement of these revenue of till this much or this much we will do this or something. So absence of governing law or jurisdictions, many of times it's completely not there. The poor clauses, hierarchy and inconsistencies. Many of times overuse of passive voice, the vague words like may or shall. The missing confidentiality, many of time IP ownership or indemnity terms are not there. And what are the future trends that we can see? The blockchain enabled smart contracts in fintech and logistics we can see. There are also various AI regarding things are happening. So many of times nowadays the chat GTP premium you can use in the I think 2000 or 2500 the prices, and you will get all the templates and everything for the AI based. But you need to read it, review it, use the technology maximum, but you cannot blind rely on the technology. You need to do your the valuations and weightage before signing or before drafting anything. Again, the contract lifecycle management, software adoption. This is all the softwares that people are nowadays using. And yes, what is the key elements that we need to consider before while drafting the good contract? So identify the fundamentals ultimately. हम किसकी side से है? Whether we are from party A, party B, about their roles and responsibilities, their jurisdictions, their timelines, if it is the time binding. So we have to bind them. For example, if we are doing the due diligence or if we are into the acquisition of one company, then you need to bind that after within the 3 to 4 months, within 1 month, the seller will provide all the data and buyer will complete the due diligence into 2 months. Otherwise it would be the like ongoing. There is no definitions of time zone has been mentioned, like time bounds, whether it is otherwise it will be the ongoing things. So again, the copy paste mistake we should avoid. The consequences, for example, if there is a triggers, penalty, arbitrations, then about if the quantify, we can be able to quantify, then we need to quantify. About again, we need to be aware about before drafting about the industry standards and implications and the customize the things. Also, we need to keep the language very much clear cut and simple. The both the party can understand. So it's not about the legalese, but it's all about the clarity, intent, and enforceability. Every comma and clause can protect or expose a client. So we have to be very much clear before putting up any comma or any non-relevant clause, because ultimately it makes the contracts or any agreement very clumsy and unrelevant many of times. So this is all short from my end regarding the leading and finance regarding contracts. So if you have any queries on that, I think you can also reach me out. This is also my digital QR code. So you will all get all details about my businesses and about my social media profiles. So you can reach me out on this number as well. Thank you all. Thank you so much for your
Thank you so much, ma'am. Now we open the floor for question and answers. Whosoever have any questions, you can ask your questions directly from ma'am or can write your question in the chat box. Ma'am, there is a question. Can you give an example of the corporate guarantee in the contemporary times?
Okay, so first of all, if we understand about the corporate guarantee is all about as I just make you understood in which scenario the corporate guarantee things happen. So many of times all the big holding companies, subsidiary companies give the whole corporate guarantees, but you have to be very much specifically. So the corporate guarantee can be for the corporate and holding company.
Ma'am,
Ultimately, who is going to execute? Any books, text you would recommend?
and ma'am, what is safe notes?
Yeah, safe notes I have already given that time about various the criteria. For example, if you are from the investor side, then you can provide your safety measures that within this much period, if I will not get return of this much, then I will have the right to exit. I have the rights to exit in case of fraud. Such type of safety notes that you can put up. Can we have the confidentiality agreement with the condition of perpetual confidentiality? Yeah, definitely. I think you can have that confidentiality agreement. You can.
Uh,
Participant, you can raise your hand also if you want to ask any question.
Yeah, there are many books actually there. You can read it out, but it's again on which forum. For example, into the startups, there are many books. For the loan finance topic, there are various books are there. So again, on which topic it's there.
Yeah, I think there are no more questions. So thank you very much, madam, for your insightful session. Again, it's a very vast topic that you tried to cover in,
Yeah, it's a
one
very
hour.
vast
So
topic about the term sheets and everything, and
definitely, sure.
you can.
Definitely, sure. On behalf of organizing committee, we are grateful for your wonderful time and insight, and look forward to see you in future events also. Thank you very much.
Thank
Thank
you so
you.
much.
Thank you.
Thank you all.
Thank you, Vinit, and thank you, participant, for joining, and see you tomorrow. Thank you very much.
Thank you all for invite.